What is up, everybody? Welcome back to another episode of Bitcoin and Markets. My name is Ansel Linder. Happy Friday out there. Hope you guys are doing well. Hope you had a good week. We're just going to wrap up the week with a Friday Hangout. I'm going out on Telegram and YouTube, so you guys can put your comments down below. I'll answer anything. I'll take a look at any news items that you guys have, anything like that. Just have a few things lined up. I want to take a look at some charts, some different type of charts that we find in Bitcoin, and go over a blog post that I wrote today. So let's go to that first. And I will share screen. Get this bigger a little bit. Okay. Telegram. Okay, so this is the blog post I just put out on bitcoinandmarkets.com. If you guys aren't subscribed, you can subscribe to the free tier. That used to be a weekly newsletter that has kind of petered out, but I still do write for the premium people on the premium tier. And also the $5 a month, you support independent content. You support me continuing to do this show. $5 a month, that's a cup of coffee or whatever. And that really helps me continue with this work and make commentary and hopefully make some connections in a new school of thought for economics that includes Bitcoin and monetary evolution. So anyway, this went out to the pro tier today, and I detailed out the Fed's lose-lose situation and how that is a win-win for Bitcoin. So let's go over a few things here. First thing is recession. Okay, I define recession and I say the actual what the NBER has for recession is this, quote, a significant decline in economic activity that is spread across the economy and that lasts more than a few months, normally visible in real GDP, real income, employment, industrial production, and wholesale retail sales. There are no fixed weights or economic indicators that and they don't declare recessions in real time. So if you go back to like the GFC, the Great Financial Crisis, they didn't say we were in recession until I want to say it was like December of 2009, but they backdated it to start of December of 2008, something like that. So they were a month or they were a whole year late for declaring a recession because there are no like specific boxes that you have to tick. There is one thing that many people, including myself, often reference, and that is 2 consecutive quarters of negative GDP growth. But that is just a rule of thumb, and that was originally coined by BLS Commissioner Julius Shishkin back in 1974. So that is not any sort of official definition. You've seen in 2020, there was like 2 months of recession. So the NBER got together and they said, hey, this fits this criteria. I think let's just call this a recession because it was a very significant economic event. If you guys know, pretty much all economic numbers hit extremes, both up and down within a few months. It was a wild, wild time. And so they just went ahead and called that a recession. How much political motivation there was to that, whatever. So most people think that the Fed they cut rates to stimulate the economy, right? So they'll see slowing growth and rising unemployment, financial stress or something, and then they cut rates, thinking that it will stimulate the economy somehow, right? So logically, even by their understanding and their paradigm, rate cuts do precede recessions by design because the Fed will cut rates when they see a recession coming. And with no fixed definition of what a recession is, and the NBER always goes back and backdates the recession, the recession and the Fed cut, they all happen at the same time. That's by design. According to conventional view, cuts are a countermeasure to soften the worst outcomes of recession. especially a cascading collapse of the financial system. But what if it actually has the opposite effect? What if the Fed's rate cuts don't prevent recession, but signal it or even help trigger it? You can see here in the chart, cut, recession, cut, then recession, cut, then recession, cut, then recession, cut. No recession yet, but it's coming. Rate cuts are like a fire alarm. This is an important piece of this whole puzzle here. Rate cuts are like a fire alarm. They don't cause the fire, so they don't cause the recession, but they tell everyone to run and panic. So, there's no like mechanical thing where the Fed cuts rates and that causes a recession. But what it does is it aligns everybody running for the exits. Okay. It's already deteriorated to a point where the Fed deems that it's necessary to cut rates. And then they cut rates and they trigger the panic. So you can see how the Fed is kind of stuck in this lose-lose situation. If they keep rates where they are, the economy continues to get hollowed out and fragile. Fragility builds, I say here. So the Fed keeps rates steady, hoping to improve things improve, but fragility builds. When weakness finally starts to show in the data, the Fed cuts and they try to fine-tune stimulus. But at that point, they're just mimicking the market's natural flight to safety. So that is another thing. So minus the Fed, if we just think about the market in general, and the market is thinking that we're going to be going into recession, they see a slowdown coming. What's going to happen to interest rates? Most likely they're going to fall, right? Because people they're fleeing to safe and liquid assets. So they'll flee into treasuries and rates will come down naturally. So by the Fed cutting rates, they aren't actually stimulating anything. They're simulating a flight to safety, which that is such an important concept that you have to grasp to make sense of this. So when the Fed cuts, they're mimicking a flight to safety as investors rush into treasury yields fall. Ironically, if they wanted to simulate strength, they'd raise rates, reinforcing confidence and increasing income to private sector via higher interest payments. Low rates signal poor economic conditions. They are not stimulus. Economics is stuck at the end of a paradigm morass. So this obviously is illogical, but they can't do anything about it. They can't get out of this morass that they're in because they're aligned ideologically and what would be the word paradigmatically to this idea that cutting rates is stimulus when it's not. It's actually simulating deterioration, rapid deterioration in the economic environment. And that's why we see this. When the Fed starts cutting, we go into recession. It's the fire alarm going off. All right. Right now, we're in a strange limbo. Okay. The Fed can't win. Keep rates high. They squeeze the real economy. Cut rates. They signal disaster. Okay. This is what's coming up. Well, we'll take a look at that live. And that's all I wanted to look at for this. I did write about Bitcoin there down below and what to expect when the Fed does start cutting rates. What can we expect? But let's take a look at that. This is the CME. I'll share this tab instead. This is the CME out to the the December meeting. So when you go to, I just Google CME Fed Watch and this comes up. But up here, you can click the different months of the different meetings. And let's go to the September meeting. This is September 17th. So it's going a little bit back and forth. You can see a week ago, one cut was at 80%. Then it went up to 91% by yesterday. And then today it's back down to 87%. So that's for the rate cut here in September. And if we go out to December, though, there's a high likelihood that we'll have 3 cuts by then, that we'll cut September, October, and December. And that looks a lot like 2024. They had 3 cuts. Yes, the first one was 50 basis points, but they did 3 cuts for a total of 100 basis points. And so it looks, I mean, it's a setup exactly like the end of 2024 at this point. So we'll see how that goes. All right, let me check any comments. If you guys are watching on YouTube, put the comments down below. Let me check Telegram. Not seeing any. Okay, well, let's keep on chugging then. Let's go into some other charts. So this is, make sure I'm sharing this properly. Okay, so this is from CoinGlass, and it's their heat map. You can just Google CoinGlass heat map. And let's see, this is out to the 3-month. And you can see there's not a lot of liquidity built up in that time frame. Let's go down to a month to see what we got going. There we go. Now we can see it more clearly. So you can see here up at 120, 121. There's a lot of liquidations to happen, and there's not as many down below. And so the market tends to seek out this liquidity. So these are short, these are sells or liquidations. So you have to, if you are short, and you say you're 100x short and the price moves 1% against you, you have to rebuy that Bitcoin. So these are actually buys up above, not sells. They're buys because they liquidate the shorts, and then be the opposite back down here. But anyway, the market tends to chase after this liquidity. It likes liquidity. It likes to be able to have a lot of volume and not a lot of movement. Markets like to be highly liquid. So that means you can buy $1 million worth and not move the price a cent. That's what markets really like. Big fish like that as well. The whales, they like high liquidity. They will seek out these places where there's high liquidity, where they can do their transactions, right? They can do their transactions in a higher liquidity pool like this so that they don't slip the price. Dex Invictus back with us. What's going on, man? Okay, so that is that one. Let's go into cycle comparison. I'll share this tab. Now, I've talked a lot about cycles over the last several months. I think maybe it was in January I started saying, hey, we're falling so far behind the cycle. I think we're not in the cycle anymore. I think we're not in the 4-year cycle. And for those people that don't know, that are new to Bitcoin, let's just share this. So we've had these cycles throughout Bitcoin's history, and they tend to line up with halvings. Halvings is where when you mine Bitcoin, at the beginning, you used to get 50 Bitcoins per block that you found in mining. Then it went down to 25, and then 12.25, and so on and so on. So every time you have a halving, it kind of kicked off a deflationary spiral. That was the thinking early on in Bitcoin. And you can see kind of the waves here. So you have wave 1, wave 2, wave 3, and they just happen to be very closely related, timing around the halvings. And so that's the 4-year cycle, or the halving cycle. But now we're kind of in some new, this looks fundamentally different than these previous cycles. I mean, you could say that this section right here is pretty flat. It's very similar to this section right here, but you can just tell that this is longer. All right. This was in a parabolic move higher. And back in this time, people were drawing these parabolas nonstop. So we didn't even see this flatness back then. It's just, if you go back now, if you look back at the chart, you can see that this was somewhat flat. But back then, it really didn't feel like it. Now it definitely feels like it. And a lot of people are talking about how this is a brand new paradigm, and the 4-year cycles are over, and we're just going to march on and up to the right. But we will see, because one thing I've been looking at recently now is the fact that this wave, this stair step right here, is like the weakest one. Okay, so if I zoom into this whole kind of move, and let me get some stuff out here. So this first one, that was a pretty decent step. The second one was a really big step after the ETF launch. Then this one, yeah, it was still sizable, right? But now this one is itty bitty. Like, is this all we're going to get? This step? If that's the case, it starts bringing out this idea once again of a 4-year cycle, that the bull market is over. Saying the 4-year cycle is dead is like saying that we are in a perpetual bull market now. We're not going to have any of these huge blow off tops and any of these huge dips of 80%. Okay. But this, with a decreasing size on these stair steps, starts bringing back like some sort of idea of coming to an end at some place. And it just happens to be around the time that the end of the cycle would appear. So if we're still in the 4-year cycles, the end of the cycle would appear around October, November this year. The final blow off top for a big dip. And that kind of is starting to match with this. I was not expecting it to stop here at 120. That's what I was expecting it to go up to 150. And so that's a much more reasonable stair step that does not show a diminishing like rollover top. So anyway, that's what we're talking about. And if we go back here to the cycles, now I just got done saying the cycles are dead, but you can see this is from the halving. You can pick out where you start your comparison. So from the halving each time, this is most definitely the worst performing, but also we hit an all-time high before the halving. So we were the best performing before the halving. But anyway, if you take it from the bottom, we're still right along in there. Okay. Very interesting that these three were so close right in this zone. And now it's kind of been sluggish. But again, if we went up to this 150, we'd be right back into the zone of these guys from the bottoms. Okay. From the bottoms. And the tops for 2017 would be out here. Let's see, where would that line up? That would line up, yeah, to like November of 2025 would be those tops. Anyway, so that's the cycle there. Let's do it from the previous top. Very interesting. We are right in the ball game of the previous top. So if you take it from the last cycle top to now, we're approaching the end of the chart here. And we're more in the ballpark with this one, okay? Crossing top of previous cycle. All right, that's good enough for that. Let me check the chat. If you guys have anything you want me to take a look at today, put it in the chat, because I'm just going to be going through a few things. Hanging out on Friday here. Okay, Bitcoin Magazine Pro. I did used to write for these guys. Then they decided to go a different direction. And yeah, but I still like them. I have no ill will. No ill will towards them. Okay, so let's see what they have here. They have a bunch of different indicators. Tell me what your guys' favorites are. I like the pi cycle top. Where is the pi cycle top? Pi cycle top. And we'll talk about this. So the reason why I like this pi cycle top is because it's been so dang accurate. We'll read about it here. The pi cycle top indicator has historically been effective in picking out the timing of what market cycle highs within 3 days. They've picked out all the cycle tops within 3 days. That is incredible. It uses the 111-day moving average and a newly created multiple of the 350-day moving average. So like a 2-year moving average, and what would this be, like a 4-month moving average, something like that. But anyway, they so the 350-day moving average times 2. The multiple is of the price values of the 350-day moving average, not the number of days. For the past 3 market cycles, when the 111-day moves above or up and crosses the 350-day times 2, we see that coincides with the price of Bitcoin peaking. It is also interesting to note that the 350 divided by 111 is 3.15, which is very close to pi, which is 3.14. In fact, it is the closest we can get to pi when dividing 350 by another whole number. It once again demonstrates the cyclical nature of Bitcoin price action over longer timeframes. However, in this instance, it does so with a high degree of accuracy. All right. Now, again, is this thing going to be very accurate if we are outside of a cycle? I mean, right now, they're kind of parallel to each other, which is also very interesting. They're not really, I think they have, pi cycle top prediction. Okay, let's go with that one. So they kind of predict out where they will cross. At this moment, they're going to cross way out here of November 26th, and they'll cross way up at $430,000. But as you know, right now, I would say that they look pretty parallel. And in a cycle, these are, that would mean they would never cross because there's no top to the cycle anymore. Yeah, very interesting. Okay, what else we got? Power law. Are you guys big power law fans? I am not at all a power law fan. I'm much more stock to flow fan than I am power law. But so this is showing like a potential top 550 fair market price right now of what, around 100,000. Floor price, ceiling price. So let's go out to the end of this year. And the ceiling price at 522. Okay. I mean, that's doable. It's not crazy. Stock to flow. I'm open to suggestions, guys. Whatever you want me to take a look at. Stock to flow. Come on. Okay, so for those new, what stock to flow means is there's a stockpile of every asset. We can take gold or oil, any commodity, and that stockpile is the amount above ground or amount in possession that's in the stockpiles. The flow is the amount that comes out every year. So in gold, it's about 1 to 2%. Gold has a stock to flow of 1 to 2%. And oil has a stock to flow of probably 100%. I mean, there are a lot of Bitcoin, or there are a lot of oil reserves around the world above ground, but I'm pretty sure we go through more oil every year than it's in any reserve. So it might be like the stock to flow probably is under 1, I would say, like way low, way low. But anyway, Bitcoin is, so what this model does is it values all of these assets based on their stock to flow, because that's a scarcity type of measurement. Gold, platinum, all these other things, they have a certain amount of stock to flow, and you can actually plot their market caps. And the guy who invented this stock to flow he has done a lot of analysis on this, and I haven't seen it for years and years, but it was pretty much in the ballpark for all of these different assets, different commodities. When you put them onto a stock to flow model and you look at their market caps, they would be within this model. And uh, Bitcoin was following it very, very well until recently. Actually, I would say back in maybe 2022. This looks like an altered version or maybe an updated version. But it should have been up to 100K back here in 2022, and it didn't ever hit that. And so that's one of the things that really turned people off to this model. Now, I don't think that it's going to be highly accurate, but what it does, it's the concept, I think, that's true. Okay. The more scarce an asset is, typically it will tend to be higher in price. Because remember, scarcity isn't just about supply, scarcity is also about demand. So if you have, say, 1,000,000 units, but there's only demand for 500,000 units, that's not scarce. But if you have 1,000,000 units and you have demand for 1,000,000 units, 1,000,001 units, then that is scarce. Okay. So, and the demand will shift depending on the price of any good. That's why a demand curve is downward sloping. Let's see, demand curve. I'll look that up real quick. Images, demand. Okay, share this tab. Let's make sure that's going through all right. So yeah, demand curve. Let's open this in its own tab. So demand curve is sloping downward. So as price goes down, what's happening to the quantity demanded? It's going up. And as price goes up, then fewer of that item is demanded. So scarcity is on this line. If you were down inside of this line, that doesn't make any sense. So you have to have the quantity demanded and the quantity supplied. If they are, if there's more demand than supply at any certain price, then it's going to be a scarce asset. Okay, that's what I'm trying to say. So let's go back to this. And so with stock to flow, it's measuring scarcity. It's all about scarcity. Okay, blah, 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 blah. Let's see, what else do we got? Any other comments, guys? 5% chance. Oh, let me see. Yeah, we might talk about that here in a minute. Okay, any other indicators? What are some of the ones that you guys like? Realized price. So realized price is a unique one to Bitcoin. It has to do with the basis at the time that the Bitcoin moved. So with Bitcoin, if you're a newbie, which if you're watching this, you're probably not, but if you're a newbie, then you know that Bitcoin is tracked on the blockchain and in UTXOs, which are just unspent outputs. And you can tell when that last transaction that sent that Bitcoin, what price was it? What price did it happen at? And you can add up all of those realized prices of when the Bitcoins move last, and you get this realized price. And it's very, very interesting. So let me try to zoom in on just the last few years. And this is typically, I used to think of this as the weak hands. Okay. So people that buy in, this is going to be more skewed towards short-term holders. And short-term holders might have weaker hands. So yeah, I always hated to see when this dropped down below realized price, because I thought, oh man, that means more selling because it's going to be weak hands selling. And really it doesn't. I mean, It didn't really affect that price all that much once it dipped down. But that's one metric that a lot of people use. And then they use derivatives off of this realized price. So they use this realized price to form other indicators out there for Bitcoin, which is pretty interesting. Okay, let's get onto Twitter. You guys can follow me at Anseliner. Let's go into some of my liked tweets, and then I will watch some of these videos. This is the craziest thing happening in Texas. So they're trying to redistrict, and then the bunch of the Democrats left, so they wouldn't have a quorum, so they couldn't change the districts and add more. They would redraw the lines, so there would be more Republicans versus Democrats that would be elected. Well, Democrats didn't want to vote for that. They didn't even want to be in the building, and so they left the state. And now they're issuing arrest warrants. Now they're getting with the FBI, and the FBI said they're going to go and help hunt down these people and bring them back to the state of Texas to get these, to get the legislative process going. And it's just a crazy, crazy situation. So let's see what they did today. It says, holy crap, the Texas House is revoking the automatic check deposit ability of any Dem who didn't appear solely to break quorum. They have to appear on the grounds to obtain their pay. So they're making them have paper checks. Come get your paper checks. Pick up your paper checks here and bring them back here, and then they're going to arrest them anyway. So let's listen to this.
I have been in constant communication with Department of Public Safety, which has been working to track down absent members in an effort to return them to our chamber. These efforts will continue through the weekend. For those that have fled to Illinois or to California, be reminded that the FBI's assistant has reportedly been enlisted, and their powers are not confined to any singular state's boundaries. As far as new administrative policies in our chamber go, Comptroller Kelly Hancock and I have enacted a new policy stating that any member absent for the purpose of breaking quorum will no longer have their paycheck or per diem deposited electronically. While
that's big,
the Constitution forbids us from withholding pay, it does not dictate how we issue the pay. Those checks must now be picked up in person on Capitol grounds, effective immediately.
Crazy.
Starting today, to safeguard taxpayer dollars and account for forthcoming liabilities under Rule 5, Section 3 of House Rules, which authorizes fines for members absent without leave, 30% of each quorum-breaking member's monthly operating budget will be reserved and made unavailable for expenditure. Absent members must also appear in person to approve or enact any of the following: requests for travel reimbursement, personal action requests, including those increasing or decreasing staff salaries, approval for newsletters and House of Reproduction services. Failure to appear in person will result in the cancellation of your newsletters and the encumbered funds.
Dang.
We have all hands on deck. We are continuing to explore new avenues.
Okay. So we'll see how this works itself out. I do think that they're going to redistrict Texas. They're going to redistrict a bunch of these other states. And I think the Democrat Party is done. It's dead. They might not win another election, at least a national election, to take, be the majority party ever again. What a hilarious meme. Here is the brain. No thanks. I'm long. Ripple. Oh boy. Oh boy. Altcoin season, guys. We're going to have to deal with all these empty heads. I saw some tweet where the guy's like, oh yeah, my portfolio is 50% Bitcoin, 30% Ethereum, and 20% Solana. And like, okay. First off, if you are a great asset allocator, you would not be trying to pick shit coins, okay? You would be working at some investment firm. You would be a wealth advisor yourself. You'd have a family office, or whatever. If you're a great allocator. You're not going to come in here as just a degen and be able to allocate capital properly like that. That's why there's a foolproof way to allocate capital in this sector, and that's to buy Bitcoin. Stay humble, stack sats. That's it. You don't have to understand why Solana is going to pump, why Ethereum is going to pump. Because, well, there's arguments against all of them, monetary, logical arguments, but you don't even have to worry about that. You don't have to keep up with what new project are they working on? What developer is fighting with other developer? What are the power struggles going on with their centralized token? What's the new feature that they're adding to get headlines? And then you trade off of those headlines of those different features. Like, oh man, this is getting so much attention, it's got to go up in price, right? You don't even have to worry about that. You stay humble and you stack sats. All right. Okay, so I think JD Vance is going to be the next president. He's going to be memed into being the next president. That like all of those the fat JD Vance face memes. It's just going to be that he is a household name and everyone knows him. Like it's really a popularity contest, and especially if you can just laugh it off like he's doing right here. So if you guys remember this video from a couple weeks ago where he was running in some zoo and people were making fun of how he was running, well, he laughs it off. Let's hear what he says about it.
And somebody was like, "Oh, he runs funny." No, the actual
it's like the dad run.
The dad run. But I was actually, my kids really like this game called Ogre, where I like chase after them, but I don't run full speed. And so I was playing Ogre, and that was what caused the great scandal of how I ran it. And somebody was like, "Oh, he runs funny." No, the actual
it's like the dad run.
The dad run. But I was actually, my kids really like this game called Ogre.
Okay. I was looking at his running. I didn't think that when I initially saw it, I thought he looked worried, like in the first part of this run. Let me mute it. Like right. Where is it? Like right here, he kind of looks worried. And then he goes up the steps. I thought his kid had yelled like, "Daddy, daddy, daddy," or something like that. He came running. But yeah, he's saying he was playing a game. Okay, he has another clip here of JD Vance has just issued a major warning to the United States, the United Kingdom, and Europe. Now he was out there, remember, just in the time right after. I think it was before inauguration. Even he went over and talked in Europe and saying straight to their faces, "Look, your censorship over here is out of control. We don't know if we can trade with you. We don't know if we can be aligned with somebody that is this censorship like this." But of course, those are empty threats. We are allies with Saudi Arabia, and they're one of the worst human rights abusers. But it is nice to see like somebody in the United States trying to stand up to these globalist communists that are taking over Europe and destroying Europe. But let's hear what he has to say here.
Well, I'd say I've raised concerns about free speech in the United States of America. I think the entire collective West, the transatlantic relationship, our NATO allies, certainly the United States under the Biden administration, got a little too comfortable with censoring rather than engaging with a diverse array of opinions. So that's been my view. Obviously, I've raised some criticism and concerns about our friends on this side of the Atlantic. But the thing that I'd say to the people of England or to anybody else, to David, is many of the things that I worry most about were happening in the United States from 2020 to 2024. I just don't want other countries to follow us down what I think was a very dark path under the Biden administration. So in the spirit of having a good conversation, and recognizing the secretary has a lot of things to do, unless you want to say anything else. Okay.
All right. Yeah, and I do like that, it's always, look, we did something wrong. We're examining ourselves. We're going a different direction, and I think that's the right direction. And you guys are still following down this commie road. You need to turn around. leading by example and being humble. And JD Vance is stacking sats for sure. Okay. Okay, what do you guys think about this thing up in Canada? We have a few Canadians here in the channel on Telegram, and they're keeping you guys from going hiking over there in Nova Scotia. And this guy says, Dan Dick says, remember years ago when I said climate lockdowns will be the next progression of COVID lockdowns? Well, here they are. Maybe that is. Maybe it is. This is a test bed here in Nova Scotia. Maybe we'll start seeing, if they're doing it in Canada, you know what the next one is? Australia. They're going to be doing it in Australia next. And then maybe they'll try it in England. And then maybe they'll try it in Denmark, you know, and they're slowly implement this thing into climate lockdowns to control the population. But we'll see. I don't think it will work nearly as well.
Climate lockdowns are officially here, and if you do what I'm doing right now in Nova Scotia, you could be fined $25,000. What do they think is going to happen if you dare to go out and take a hike? This? Canadians have been told over and over again that climate change is what's causing wildfires, but now the blame has been shifted to you directly, and you are the one who needs to be stopped. But guess what? Riding your bike and hiking and fishing doesn't cause wildfires. In fact, more often than not, the cause has been state control. Remember the shoe swap fires in BC? It turned out that the director of wildfire operations, Cliff Chapman, admitted that they started the fires with a controlled ignition.
We did conduct a planned ignition on that fire last Thursday. We did it cautiously. We knew the winds were coming. As those winds were approaching, going through the Caribou Fire Center, there was a continuous line of fuel between the main body of the fire and all of the communities along the North Shuswap. Unfortunately, with the wind that we knew was forecast and that was coming, that fire went above the control line that we burned off from and then swept back into the communities in the North Shuswap.
These are the people who are supposed to have all of this under control.
Dang. Yeah, and it's policies in California where they don't burn the undergrowth, right? And it makes the fires worse. I don't think this is going to work at all. They might be able to do it in small places like Nova Scotia, maybe a small place in Australia or something, but they're going to get a lot of pushback, I think, on this. These times are over. They're not going to be able to do this to us anymore, locking us down for climate reasons.
Or what about the recent fires in Lytton that was literally caused by the RCMP?
And the British Columbia RCMP is taking responsibility for an out-of-control wildfire burning north of Lytton.
The BC RCMP has revealed that it accidentally sparked the Eisman Creek wildfire currently burning along Highway 12 just north of Lytton.
It does appear that equipment was simply failed. Obviously very unintentional.
Oops, our bad. But forget about that. It's you nature-loving Nova Scotians who need
our bad, but you can't go for a hike.
To be stopped at all costs. And speaking of costs, here's Nova Scotia's crime and punishment guide. Drunk driving, $1,000. Assault someone, $5,000. Use your phone while driving, $500. Drive without insurance, $2,000 to $5,000. Shoplifting under $5K.
What? Driving without insurance is more than drunk driving, and more, it's as on par with assaulting somebody. Oh my God.
$1,000. Speeding 40 kilometers over the limit, $400. Trespass on private property, $500. Illegal dumping, $50,000 to $5,000. Vandalism, $1,000 to $5,000. Walk, hike, or bike in the woods, $25,000. They even set up
That's insane. That is insane.
a snitch line so that you can rat out your fellow neighbor who might dare to take a nature hike in the woods. Gee, it sure would be a shame if thousands of people started making fake reports, overwhelming their systems, wouldn't it? You could say stuff like, yeah, I just saw a totally flaming prime minister just walking around outside like it's no big deal.
Oh man. Oh man. Crazy stuff.
Climate lockdown.
Casso says the funniest thing to him right now is the dildos in the WNBA. That is hilarious, man. It's hilarious that they had more betting on what color was going to get thrown out versus the entire WNBA. I think that WNBA it even with all the controversy, they're still struggling, and you would think that would maybe push a few more ticket sales and stuff like that. Nah, I think this is going to. This situation isn't necessarily going to cause any problems financially for them, but it's. I think the WNBA only has a few years left. I really think that if they're going to keep pushing for more pay and all that, I think it's just going to start unraveling. They're going to have to start. They'll make their team smaller. So I don't know how many are on a basketball team. Let's say there's 15 people that get any playing time. Maybe there's another 5 people on the practice squad or something like that. So about 20 people on the payroll. They're going to get rid of 5 that are on the practice squad. Then they're going to pare it down to maybe 10 or 12 women on a team. And it's slowly going to just fade away. And I just don't know how it can be successful. It is horrible to watch. It is absolutely horrible to watch. I've tried to watch it in my gym at our neighborhood gym up here. They have ESPN or whatever, and whenever there's WNBA, I'll just watch it for a few minutes, and it is just terrible to watch. I cannot watch it. The best women's sports by far, softball and volleyball. I can watch softball and volleyball. Like college volleyball or sand volleyball, that's fun to watch. Softball is definitely fun to watch. It's a much faster game than baseball, but I just can't get into WNBA at all, and I don't think anybody can. Green, what do you got here? Oh, showing our team versus another country's team, the USA team. Yeah. I mean, one thing that could save the WNBA is to raise up the superstars. Hold on 1 second. Sorry about that. Someone came to the front door. Trying to paint my house. So what was I talking about? Oh, the WNBA stuff. No, I can't remember where I was. Oh, yeah. You would elevate your superstars. Caitlin Clark, and now Caitlin Clark's teammate, this gorgeous blonde. They would be elevating them. That would be what's on replay of highlights over and over. The good-looking ones, that's who you would put out there to the good-looking ones that can play. I've seen some highlight reels of just constant air balls. These girls can't even shoot. Half of them. It's like high school level skill, it seems. It's worse than high school. It's worse than high school. The middle school boys that are right down the road from me, they won the county basketball. They were damn good. The boys, middle school boys, were really good. They were probably better than they could beat a WNBA team. They had one guy on there that was like 6'8" or something, 6'9". But no, they could probably beat some of these WNBA teams, middle school boys. It's just not fun to watch. You have to change the rules. Like, for example, softball, okay? They throw it, they pitch it differently. They have different, and the way they equalize that is they made the field smaller. So you pitch from 43 feet instead of whatever baseball is, which is, I don't know, is it 75, 80 feet or something like that? So they shrink the field. They have a bigger ball, and they make it more exciting. You can't lead off. So it's some different rules than in baseball. And it's just a lot more exciting. So if you change the rules somehow for basketball, it doesn't have to be men's rules basketball. Why don't you make female basketball that's different? And you could call it something different too, like softball versus baseball. You could call it something different as well. It would just be the female version of basketball. Why do they have to force this on us where, girls shooting at 10-foot rims, they can't even make these baskets? I mean, there are, of course, Caitlin Clark out there and other girls that are really good, but half of the WNBA that shouldn't be playing. Okay, where are we at? Hope that doesn't make my YouTube channel get axed. I really don't want to lose this YouTube channel. Okay, so this was interesting as well. So over 31 trillion in U.S. wealth platform capital is still restricted or prohibited from accessing Bitcoin ETFs. Structural constraints are suppressing flows and creating opportunity. That won't last forever. Data is based on direct conversations with advisors at each platform. Okay, but they can always buy MSTR, right? That's one reason why MSTR is going gangbusters, because these guys, they can't access the ETFs, maybe, but they can access MSTR. I'm almost certain. You see Charles Schwab, exposure unrestricted. Morgan Stanley, exposure restricted. Fidelity, unrestricted. Bank of America, restricted. Vanguard, completely prohibited. Look at all these in the prohibited column. Wow, let's just read those. Edward Jones, Raymond James, Citi, Rowe Price, Neuberger, Creative Planning, Northwestern Mutual, and Edelman. Those are completely prohibited. The only ones that have unrestricted exposure: Charles Schwab, Fidelity, Wells Fargo, Mariner, and Fisher Investments. So, yeah, there's a lot to go here. 31 trillion in capital that has limited or no exposure to be able to buy the Bitcoin ETFs. That's going to change. That is definitely going to change. And when that changes too, we probably will see that affect the MSTR premium. So there's a lot of things going on here when you talk about these investments into MSTR, into the ETFs, institutional adoption. What explains maybe the MicroStrategy's premium? Well, it could be this right here, that these guys can't buy into the ETFs as easily. Okay. Let me see if there's any more comments. Okay, Michael Saylor, he was on with, what is this, Bloomberg TV. And this was just 40 seconds of this clip, but I think this one's longer that he put out, 7 minutes. Let's watch a little bit of this.
$1 billion so far in 2025 just for Bitcoin purchases, according to advisory firm Architect Partners. But that trend is expanding into smaller tokens as well. And I'm pleased to say that joining us now is Strategy Executive Chairman Mike.
Smaller tokens or smaller companies? I mean, you can say Ethereum, but it's really not expanding that much into smaller tokens. It's still like, Coinbase for a long time, they were shitcoin casino, right? But if you looked at their volume and you looked at like where they made their money, they still made most of their money off of Bitcoin trading. It was at least 50%. And even if you ask these major shitcoiners like Eric Voorhees and other people, they have they're 90% Bitcoin, right? So Bitcoin has all the volume, and it will have all the volume regardless of, it'll probably have a higher percentage of the volume in these institutional plays because they're less YOLO, right? The trading volume on Coinbase, trading volume on these other things, they would be, they're open more to degens. They're open more to the YOLO Wall Street bets, where these institutional buyers are not going to be YOLOing into Doge or some third-rate Cardano scam token. Maybe Ethereum. Maybe some of them will dip their toe into Ethereum, but 5% max. I don't think they're going over that. It's going to be 95% dominated by Bitcoin exposure.
Saylor. So, Michael, it feels like, of course, strategy as it's now known, really started.
He's putting on a smile for the camera.
This crypto treasury company trend that we're seeing now. I know that you broadly are supportive of seeing that, seeing competitors come out and also raise their own crypto treasuries. But how do you feel about the trend that now it's moving more into altcoins? It's moving away from Bitcoin. Do you think that that's a sustainable setup?
You know, I still think the vast majority of the capital flowing into the space is flowing into Bitcoin. We've gone from about 60 companies capitalizing on Bitcoin to 160 companies just in the past 6 months. So I'm laser-like focused on Bitcoin. I think Bitcoin is digital capital. I think it's going to outperform the S&P index over the indefinite future. And I think it's the clear global monetary commodity in the world right now. So it's the lowest risk, highest return, most straightforward strategy if you want to outperform the S&P and if you want to inject vitality and performance into your balance sheet.
So it sounds like you're not concerned that perhaps the fact that we're seeing these other digital asset treasury companies come to the fore here, expand into all
second best. There is no second best, okay?
altcoins. You're not concerned that that's going to detract attention away from what strategy is doing.
I think there's an explosion of innovation across the entire crypto economy, and on the margin, it's really good for everybody in the digital asset space right now. I think the big idea is $100 trillion plus of capital in the traditional equity capital markets and traditional credit markets, and what we're focused on is delivering digital asset-backed equity and digital asset-backed credit. And I think those
Bitcoin-backed
credit instruments and equity instruments are just going to outperform the traditional fiat credit and traditional fiat equity instruments all around, and capital is going to flow into the digital economy due to that.
Bitcoin economy. Is this flashing for you guys? Is this getting bad reception or something? I think it's on the video itself and not on the stream.
Michael, explain the assets, the unique assets to which you offer investors access, because it's not just Bitcoin treasury company. You have, you think, a unique selling point compared to others trying that strategy.
Yeah, the real compelling idea of a Bitcoin treasury company is we hold a huge stack of Bitcoin, about $74 billion worth of Bitcoin. Bitcoin's a 21-year duration asset. You got to hold it for 21 years if you want the full potential, and it's about 50 vol and 50 ARR. Most people don't want that amount of volatility, even though it's got that performance, and who wants to wait 21 years? So what we've done is we've created structured Bitcoin in the form of Strike, STRK. We give you the Bitcoin upside, a guaranteed dividend, and principal protection, and that's an alternative for people that don't want the roller coaster. We've created a long duration senior credit instrument called Strife. Think of it as a 21-year Bitcoin-backed bond. Pays about 8.5% dividend yield right now for people that just want that quarterly dividend yield and a seniority in the capital structure. And then you've got a high yield long duration instrument called Strife. It's actually paying like 11.5% dividend yield right now. And so that's for people that want high yield forever. And they'd rather have 11% quarterly than take that's guaranteed than the roller coaster of Bitcoin. And then the most exciting thing we've done just a few weeks ago, it's the biggest IPO of the year. It's called Stretch, STRC. And STRC is like a monthly Bitcoin-backed bill. And so think of it as a Bitcoin alternative to treasury bills or money market funds. It's 9% dividend yield, monthly cash pay. And if you just want to park short-term cash and get paid 9% dividends and have it powered by Bitcoin, you're not taking duration risk on the interest rate. You're not taking the Bitcoin volatility. And that's our most successful offering to date.
Well, Michael, I do want to talk a little bit more about your financing. You touched on it a little bit. One of the other trends that you've started is issuing convertible notes to fund your Bitcoin purchases. You've also been issuing preferred stock as well. When it comes to just straight MicroStrategy shares, we know that's very popular with retail. We know convertible notes have been popular with more of the Wall Street crowd. Do you have any insight on who the end buyer of your preferred stock is?
Well, right now we've had really extraordinary demand from retail. In our last offering, I mean, we started with about 30 or 40 million of retail demand on the first.
Retail, guys. Remember, retail's not supposed to be here. That's what the shitcoiners will tell you, because altcoin season hasn't fully arrived. And they'll tell you, oh, the retail isn't here. No, retail showed up. Okay, they are here. He's talking about retail right here. There's also retail people buying the ETFs. Those are, I mean, they could be considered like accredited investors, but they are they're retail buyers. They're not institutional buyers. Okay, and no, they're definitely here. They're definitely buying Bitcoin, but they're just not. You know, the shitcoins, they ruined their likely customers. All right, so in the population, say there's about 20% of people, maybe it's more, I don't know, but that are YOLO Wall Street bet gamblers. Those people already bought those shitcoins in previous cycles and got burned. So now who are you attracting? Your YOLO customers or target audience, they already are burned. The only retail left are going to be those ones that are a little bit less risky, and they're looking at, you know, they have some investments, maybe they have some other ETFs, some other mutual funds, whatever, and they just add a little bit of Bitcoin exposure through the ETFs or through MicroStrategy, and that's the retail people that we're seeing this cycle. All the other retail people have been destroyed.
Preferred, and then it increased to 60 million on the second preferred, and then 120 million on the third preferred, and about 600 million on the fourth preferred. So retail's off the charts. We've also got a lot of institutional long investors, people that are holding it. Look, if you like Bitcoin or if you like MSTR, these are all pretty compelling for any pool of capital you've got. And then, of course, a bunch of hedge funds also got very excited about this. There's lots of different ways to trade these against each other. So a good mixture of institutional as well as retail investors buying into all these preferreds.
And Michael, I'd also love to get your thoughts on some of the other big news from today. A lot has certainly happened on this Friday, but one of those is what's going on in the gold market right now. You have the Trump administration ruling that gold bars will be subject to tariffs as well, these reciprocal tariffs. So imports of gold will be tariffed, and that's really sending shockwaves through the gold ecosystem. Gold and Bitcoin are also often compared to one another. Bitcoin called digital gold, for example. I wonder if you think this has any ripple effects, positive or negative, for Bitcoin.
It does. Bitcoin is digital gold. It's going to accelerate the migration of capital from physical gold to digital gold. You know, Bitcoin lives in cyberspace, no tariffs in cyberspace. The big appeal of Bitcoin is it's not physical. It doesn't have weight. You can settle anywhere with anybody in a few minutes. And so gold has always been too heavy, too slow, and you can't really ship it across an ocean. And if you do, now you're getting tariffs. So I really think it just reminds everybody why the digital version of gold is better than actual physical gold. And I think it's going to catalyze a new wave of institutional adoption of Bitcoin.
Boom. I think that's mic drop on that one for sure. Okay, speaking of MSTR, I wanted to go over this tweet, and this will probably be the last thing we talk about today. I went back and forth with a couple people, one of them being Checkmate. So let's go down into here. Oh, here's something I tweeted out earlier today. So this is Ethereum, not even to the December 24 high, and they have a long way to go to. Yeah, it is a pump, but anything to write home about yet. A lot of stuff about AGI coming out. I guess ChatGPT 5, people are messing with it, and it's getting basic math wrong. Of course, that can be tweaked and fixed. But this kind of stuff can't be fixed, I don't think, because these are the way that the large language models work. They don't like. I remember when I was first starting to use ChatGPT and I was using it for editing, I would want it to count my words, right? And I would want a certain, maybe I would want this paragraph edited, and the paragraph was 120 words, and I'm like, I want to try to get it down to 100 words, but say the same thing, right? It can't do things like that because the way it counts words, the way it's doing all of its tokens internally, it doesn't work like that. And so just what is the fourth word of your response? The fourth word is the, and it's not anywhere near the. Like, is there even the in the response? So it can't count these things. Oh, here's the word, count the number of T's in Tennessee. The word Tennessee contains 4-letter T's. So these are simple tasks that these AIs can't do. And yeah, I'm just super not impressed. I'm super not impressed. Okay, let's find this. All right, this was in response, this TXMC trades. They are, I think, long Bitcoin, but unwillingly long. They don't want to be long. They don't like Bitcoin, but they're long Bitcoin. Okay, I hope that makes sense. So he's commenting on what Preston Pish says here. We're going to play this, and then we'll go over what he says about it. So
you're giving me
talking about MSTR here.
10%. The common person immediately says, well, everything else I can go in the preferred markets is 8% or 7%. How are you giving me 10%, which is 2 or 3% higher with the same or better risk profile? And the answer is Bitcoin, because the hurdle rate on Bitcoin is 45% annualized. What he's doing is, on one hand, you got Bitcoin over here on his balance sheet, that the common stockholder, like all of that, it's here, and it's growing at, we'll just say 45% annualized. And then over here, which is separate, you got this preferred stock issuance. Let's just take 10%, so it's an easy number. He's issuing shares. He's paying a dividend of 10%. So if the share value is $100, he's paying a $10 dividend annualized on that $100 share issuance. And the person who holds that gets that $10 every year. But when he issues that $100 share, he immediately takes that cash, he turns it into Bitcoin, and he puts the Bitcoin on the balance sheet over here. He's providing the fixed income to the person here. There's a third, let's just say it was.
Yeah, but the question is how, like, Bitcoin's average 40% is not cash flow. It's capital gain. So how do you turn that capital gain into cash flow? You'd have to sell some of the capital or issue more shares or more debt. You could also use that Bitcoin to lend out, right? And charge interest and use that as a revenue source. But the question here is, how do they turn that 40% into the 10%?
40% here. There's a 30% difference between what this is growing at And that 30% arbitrage is how he's making money for the common shareholder, in excess of just the Bitcoin growing itself. This is a business.
It's a flywheel effect, and it's so genius.
You're securitizing Bitcoin, turning it.
Okay, so that was the video that this guy was responding to. And he says, Preston is literally describing a Ponzi scheme of perpetual stock issuance in order to pay dividends, not mentioning any of the behavioral assumptions built into believing that it will work forever. I don't think they're saying it's going to work forever. That's a straw man. There's going to be different ways in the future that they can monetize the Bitcoin that they have, like being a Bitcoin bank of some sort, different spin-off businesses, whatever. So nobody is saying forever. That's a straw man. Suggesting an algorithmic stablecoin design offers the same risk profile as a vanilla government bond. 100% BS. Finding it harder and harder to take any of these people seriously. Okay. So I mentioned two things. One was a straw man, and one was this word, literally a Ponzi scheme. And so I responded, and I said, I hope you're using Ponzi scheme hyperbolically. It's not a Ponzi. So what do you need for a Ponzi scheme? What is a Ponzi scheme? Well, it's where you take new investor money to pay old investor money. But there are also other aspects to a Ponzi scheme. It has to be secretive, hard to exit, where these early adopters can't sell. There's no open market for these shares of this company. Okay. It's not traded on the stock exchange. It's a scheme run in private, in secrecy. It's not transparent. And lastly, there's no underlying asset. There's no underlying good. Like if you're running some Ponzi's to do something about import export, I think Bernie Madoff was import export stuff. They're actually not doing any importing and exporting. It's all fake. Okay, so that is what a Ponzi scheme is. It's a fake asset that's illiquid and completely secret. And yes, then it takes new money to pay off the returns for the old money. Sorry, I'm stumbling over my words here. The only thing that it has, the only thing that they're saying a Ponzi scheme is the way that they take the new money to pay the old shareholders. Okay, but the Ponzi scheme is much more than that. He says it functionally requires perpetual stream of future investors willing to be diluted for the execution of a Bitcoin strategy, including now to pay dividends on certain offerings. And the company has no meaningful cash flows otherwise. It is highly Ponzi adjacent, even if it is transparent. To argue otherwise is kind of nonsense. Okay, that's crazy. That's just stupid. Let me go. It continues in another place. Checkmate was on it. Where was he? Okay, so he says they literally have to issue more bonds to pay the coupon on existing bonds. Again, honing in, focusing completely with blinders on about one aspect. Okay, then I respond to him. And I say, you're describing a very common practice across the stock market, rolling debt. So you're just rolling debt. That's what it is. If you have to borrow more money to pay off old money, everybody does it. It's a common practice in all companies everywhere. There's probably a handful of companies on the SP 500 that don't do that. New borrowing to pay off old debt. It's just rolling your debt. That's exactly what they're doing here. That's the only thing MSTR shares with a Ponzi. And it's not even airtight because they can still sell their Bitcoin. They don't have to issue debt. They could sell Bitcoin to pay off these people. So even that one aspect that you're comparing is not airtight. Why force a label then? When the key traits of a Ponzi scheme, secrecy, illiquidity, and no real assets aren't there. Why would you label this Ponzi? Even if you say it's Ponzi adjacent, which he comes here and he says it's Ponzi adjacent. There is no adjacency to a Ponzi scheme at all. You would have to say every single company on the S&P 500 is Ponzi adjacent. And if that's the case, it loses its relevancy. If everything is this, then why even label it that? Why even use that term? See, the reason why they use the term is to denigrate it. I think it is to feel connected to Bitcoin skeptics. There's a little bit of this like nouveau riche feeling around Bitcoin, right? The old money doesn't like it. Even if they're going to jump in, they're going to get some exposure to it. Even if maybe they get in big, like the Trumps, maybe they get in big and they make a lot of money. The people that only made money with Bitcoin, and they didn't come from some other form of like building a business and then they have other investments and then they bought into Bitcoin and they whatever. You only came up through Bitcoin. There's going to be stigma, a nouveau riche stigma against these people, right? And so checkmate here, what I think he's doing, and this is no shade on him. I mean, I just think it's human nature. But what I think he's succumbing to is some sort of feeling, and definitely the TXMC trades, like he falls right into this. Like he probably wants to be one of the old money people. Right? He wants to be old money guy. He wants to say, I made my fortune by following the rules and having my right diversification in my portfolio and having the real estate portfolio and doing all these things. And all of a sudden these Bitcoiners come in and they make double my returns on staying humble and stacking sats. I hate them, right? You get that feeling. And I think checkmate is falling for this a little bit. Okay. He's a super smart guy from all the stuff I've read. I don't subscribe to his thing, but he's a good actor as far as I'm concerned, and he has quality content. But this reeks, forcing a label of a Ponzi scheme reeks to me of old money thinking, not fiat money, old establishment Luddite type stuff, okay? Where you are against the nouveau riche. I don't know what his background is. Maybe he comes from a wealthy family and it's just kind of in his blood a little bit to hate those nouveau riche people. And that label him a Ponzi. You got rich off of Ponzi, where the good ones, the smart ones, the old money ones, we got rich off of real investments. But the way he's describing Ponzi adjacent is everything's a damn Ponzi. So why force that on people? I think it's just nasty. It's just nasty. Okay, let me see any comments from that rant. And then we're going to call it a day, guys. No comments. All right, bitcoinandmarkets.com. Check it out. That's where I do all my writing. Thanks for hanging out with me, guys, on this Friday. Have a good weekend. Go out there, touch grass. Tell somebody that you love them. Spend time with friends and family. That's what's important in this world. You know, we keep our head down. We stay humble. We stack sats. But what's really important is friends and family. And so get out there and enjoy life. All right. That's it for today. Hope you have a great weekend. I'll see you on the next one. Bye.